Aprilia. Market, nice gains, care of the lead set from Wall Street. We didn't, though, see that late sell-off, so that was a bit of a departure from the norm.
Carson, we have come to expect a bit of a late sell-off on the back of Chinese performance, but today the Shanghai Composite stayed well behaved, and so it was up by 2.2%, so it really wasn't a drag on the Australian market. Overall, we saw a great performance by the Australian market. As you mentioned, the US market gave us a good lead in today. It saw its sixth consecutive session of gains. In fact, since the March low, we've seen the US market now gain a massive 52%. Now, it was better than expected economic data flowing through from the US that helped markets over there. That sentiment certainly transferred onto the Australian market today, but we saw earnings very much in focus. We saw Westfield up by a massive 4.7%, and that helped the property sector to be the best performing sector on the market. We also saw Consolidated Media gaining almost 12% after selling off its stake in Seek. I guess the market's speculating on what it's going to be spending those funds on. We saw Transfield having a good day after beating expectations, up by 9.2%. In fact, we saw every single sector on the Australian market higher, except for the industrial sector, where Leighton's was down by 1.9%. So overall, a great day for the Australian market.
Great day for Lihir as well, up 7.8% at the close.
Lihir Gold came out with an underlying profit of $154.9 million. That was in line with expectation. Its headline was a little bit disappointing. The headline figure was a loss of $300.9 million. Now, the headline loss was mainly due to $409 million in terms of an impairment related to its Ballarat mine. That impairment was much bigger than expected. The market was expecting an impairment of between $250 to $350 million. So that was a bit disappointing. But the market chose to overlook the negative news for the positive news. And the big piece of positive news coming through for Lihir Gold was the indicated resource at its Lihir Island in Papua New Guinea has been upgraded by 31%, and that's really the key to growth in Lihir Gold's share price going forward. So we saw its shares up by 7.8% today.
And what about the shift into West Africa? I was getting the sense today that it was saying, look, instead of putting all our eggs in one basket into PNG, we will, as it were, diversify and spread any risk.
I think diversification is well and good for Lihir Gold, although the market seems to think that this Lihir Island project seems to be the key to growth going forward, and I guess that's why we saw such a dramatic reaction in its share price today.
Fair enough. Pacific Brands today, this was a case of, well, you come in line with expectations, but somehow, today of all days, the market chose to ignore it.
It's been an extremely turbulent year for Pacific Brands. They've been looking at overhauling their business. They've looked at reorganising their balance sheet, reorganising their debt, and they've come in with a headline loss of $234.5 million. The actual result was in line with expectations, but I guess you have to consider where Pacific Brands' share price has been in 2009. If I bring up Pacific Brands' share price, this is what it looks like in the last 30 days, and you can see that the share price has been going up. Sorry, this is its share price in 2009, and you can see its share price has been on this uptrend. Today we saw it pull back towards this uptrend, and it's right on this support line at the moment. So the key for Pacific Brands is going to be to bounce off this support line. If we see this line broken in the next couple of sessions, that could be a negative for Pacific Brands' share price. But it's had a phenomenal rise this year, up by a massive 200% in the year-to-date so far. Today the market was a little bit disappointed about the outlook commentary coming out from this company. They're saying that in the current financial year they're expecting earnings before interest, tax and amortization to be lower than the last financial year, which it's just reported on. But they are saying that the second half of the year should see an increase from the previous corresponding period. But I guess the market was a little bit disappointed about the delayed EBITDA recovery that it was predicting. So Pacific Brands sold off, down by more than 10%, but a pretty good performance in 2009 so far.
What does Julia Lee like of all the companies out today, if you could have one in your portfolio, based on results?
Based on results, I have to say that Westfield was a star performer, and I guess the capital raising not happening was seen by the market as a bottoming out in that property sector. So it does look like better days ahead for that property sector. And Westfield, it's got such quality assets in that property sector. It's a standout because it has a pretty strong dividend as well. It has changed its dividend payout ratio. It will change it next August. So its dividend payout ratio more 75% rather than the 100%, but that will allow it to reinvest some of that profit back into the business and hopefully put together some extra growth, which should drive its shares forward in the coming years.
They were very mum on China when I spoke to Stephen Lowy today. He wouldn't confirm nor deny any plans in that direction.
They're the world's largest shopping centre, and China is growing at a phenomenal rate, so I guess it's just a matter of time.
He did say, though, we don't jump on the bandwagon as a company with lots of hype like that. We do take a longer-term view. We're not going to be wooed by any short-term spend-up. Interesting to see what they come out with. Anyway, for now, have a great evening.
You too. Thanks, Carson.
Appreciate it.